Yeah, so I'm going to do some 1 hours. I've got a couple examples I have pulled up, but let me pull up this ES chart first because let's explain what a trend break is first. So trend break is a setup, right? So we can just say the trend break is a setup. It's a retest setup. And the concept here is we want to find the leg or the directional move of the market that was responsible for confirming the shift in trend from either a downtrend into an uptrend or from an uptrend into a downtrend. And so in order to sort of like have a high or a low, we need to have what I call a move to the low. So here, this would be sort of like the move to the low. This leg down, we had like, what is the, imagine the market's kind of like coming down, right? And this is the new low. So this, from this high to this low would be sort of that move to the low. So the move to the low is kind of from here to here, right? Mm-hmm. Just making a new low doesn't mean that this is going to be the low or that the trend shifts. And what I've done in the way that I look at trend is I have a rule set for activating that. So I want to know it's not just good enough to get above it, like here, right? It's not just good enough to get above this high once. For me, I want to see us get above the previous high. Okay. And sometimes the previous high is higher. Sometimes the previous high can be lower. I've got a couple of different rules for that. But in this example, the previous high is just up here. And I think in general, you could just like bucket them all into like what was the previous high. So I want to see the previous high also get taken out. So we have a move to the low, right? And yeah, okay, we got above it here. But we didn't get above the previous high. Now, when we get above the previous high, in my mind, or the concept of this setup, is that the leg, which I call the trend break leg here, that sort of confirms the move. It makes that second higher high. It takes out the high from before the move to the low. And now we've got like a very convincing move to the low that we got above, and also an activation leg. Now, sometimes this first leg will do both, make the move to the low, gain the move to the low, and activate. But the point is that we're isolating this idea of this like sort of trend break leg. And so again, we have a move to the low, we have the previous high, which is our activation level, and then we have the trend break leg, which is sort of that leg that says, these are the guys that said, I like that low, let's go higher. And so the concept here is, if these are the guys that confirmed that move to the low or the high, then when we come back to that area, specifically the bar that puts in that low, I want to be a participant in a rebid or a reoffer from this spot. Yes. And that's the trade. It's sort of like a continuation trade. Call it a pullback in trend, whatever you want to call it. There's probably a bunch of different names out there for it. But the concept is identifying sort of this in a systematic way, identifying the move to the low, taking out the previous high, and then saying which leg did that. And that's that trend break leg. So let's take a look at a couple of examples, and we'll look at the inflow like midday one in NQ. So we have a very clear move to the high, right? I mean, we came from a low down here, and this is the highest high. So that's what I have sort of marked out with this box here, and we'll zoom in on that now. So you saw the low we came from. So if we have the move to the high, right, the previous high in this example was actually, the previous low, because we're going the opposite way. In this example was actually above us. So in my rule set, if the previous low came above, it's actually more important to take out the next low, right? Versus if it was above, we would want to take out that next high. And that happens right here. So our activation leg, right, would be this leg right here. So from this high to this low is the leg. These sellers are the ones that said, all right, that high was a good high, and I believe in it, and in this idea or this setup. So and, we have a
for this too. Just the picture that you drew a minute ago. Just if you see that screenshot and you're listening to this would be an example of flipping that upside down.
Yes, yeah. So this is the short version. We'll look at a long version in ES here. So again, we have a move to the high, right? we have a break below the next significant low, which in this example comes on the downside of the move, and that is a close below that right here. And so now we've identified basically from this high to this low as significant. And like I said, the first bar, the initial sellers that started that leg down, that in my system confirms that move to the high, that's where we want to reoffer. And so here you can see this happened. This move happened at 11 o'clock in the afternoon, and we confirmed it at noon, and we pulled back into it in the power hour. And this was the bread and butter. So right here, we pulled back into this zone here in the last hour of the day. I entered puts, which, if you trade options, you know that the volatility in options in the last hour is significant. And this move from basically 385, so it took 10 points of heat, 385, went, 200 points into the close. And this was actually the low into the close, and then they bid it out. So this zone would be considered a trend break, a sell side trend break. So we made a move to the high. We confirmed that with this leg here. These sellers in this process are the sellers that are significant, and when we re-offer that, this is where we want to enter. Cool trade for options too, because you have limited downside risk but unlimited upside risk, and so that's the NQ trade. In ES, we'll look at it the right way. Or whatever, the way of the example. Here in ES, we have a move to the low. So this is January 13th, this Monday. Again, coming from a very significant high. You can kind of see it like way up here. This is the sequence of making a low. And in this example, very clearly the previous high was above it. And if we just kind of track over, we can see that the leg that was responsible for, and it was a strong leg, right? That was a big push up. These buyers confirmed that low in this system. And so we take the bottom bar or the first bar of that sequence, and that's where we want to be entering. So when we pull back into that area, we want to look for a rebid. So this would have been not a full day later. And sometimes these are the best setups. They don't always happen an hour later. Matter of fact, I think, in my opinion, the best setups come back to these hours, days later.
Those are the ones that you get those like one touch and bounce and they rip for like 100 points. You're like, what just happened?
Yep. So in this case, we retest it at 10 o'clock, the 10 o'clock candle on Tuesday. So a day later, and basically the morning drop down, we hit this sort of rebid from a trend break or a buy side trend break perspective. And I think the results kind of speak for themselves here. Like we just trend up and close on the highs. We scoop up into the next day. We have data, and we just push up to basically in ES what was about 100-point move. A 200-point move in ES. So this would be an example of a buy side trend break. Again, we make a move to the low. We identify the previous high. The leg that takes out that previous high or confirms that move to the low, those are the buyers that, in my opinion, were convinced that that low was a significant low, and they're going to defend it. And so if the thesis is they're going to defend it, we want to join them on a retest of that level. And so I think we can look this. So this is on the hourly chart. This same concept works as you go up in time frames, and as you go up in time frames, your sort of like risk expands because daily bars are big, weekly bars are big by nature, and again, another good reason to sort of move this trade potentially into options if you're not a swing trader. You can go out weeklies, and I've got kind of a system for this. So if it's an hourly trend break, I like to take 0 to 1 DTE. at about like a 25 to 35 delta. And I'll try to close those once we go sort of like an average 1 hour move, which in ES would be like 35-ish points, 25 to 35 points. If it's a 4 hour to daily move, I'll try to take them on like a 3-day 3 DTE, and same thing. I'll look for like a little higher delta there. I try not to go more than like 1 or 2 to 3 strikes out of the money, but something like that. So again, as we go into a higher time frame, let's look at Amazon on the weekly here.
Pulling that up. Does anybody have any questions?
The best trades, in my opinion, come from like what you just showed, but it's almost like the patience of waiting for someone to step out.
It's the not picking the top. It's not picking the bottom. It's joining the rebid or the reoffer after the bottom or top has been confirmed. And you just hear that a ton
and it's
from good traders.
The difference is like trying to pinpoint that spot. And let's say in theory, for this Amazon example, if where you wanted to put a trade on was 170 to sell or buy puts, and that all happened pre-market, then like, yeah, you might have a short bias and an expectancy of how far it goes, but you'll get ripped apart trying to catch the entry because look at this. Mm-hmm. So if you can't, and you're sitting at the market during the times that you're trading, if this doesn't happen when you're at the screen, then you just become more and more aware that you're vulnerable, because we could easily run back up and test into that again and fail. But the first touch is the best touch, right? So it's like, do you really want to fight it if you missed it, or do you want to you just have to go into the waiting game till we go back and test something that was lost, or blah blah blah. But
yeah, and to your point, do you want to fight a strong rejection? I know a lot of people that were trying to long that rejection on Thursday in NQ, and I just like, dude, I'm in this trade. It's a ODZ down, 30-second no tick down. We made a sell side trend break in the middle of the afternoon, retested it, and like there is no way I'm longing this dip into this dip into the close. I am short. I'm not touching it until the market like closes. All right, so we'll jump into this weekly example just from a high time frame perspective, because I think it's like kind of cool to see it work on multiple time frames. So in Amazon here, we are looking at June 21st. Again, like a huge up move from $85 to basically $88, where they never made a significant low. And the move that happened from June 28th to July 12th, that the sequence of weekly candles that make that high, we have a very obvious example of the previous low was down here. If we just kind of jot over here, we see that this is where that got taken out. And so in yellow here, if you're watching on the replay, you can see I've identified the leg down that confirmed, activated, and said, yep, that high, we believe in it, and we want to go lower. And so they make that low, and it takes all the way. So that move started December 27th. They didn't retest it until March. So we're talking months later. And if you look at the first candle, the body of the first candle that made that confirmation leg lower, when we retest that, it's at roughly 170. And we moved from 170 all the way down to 81. So this thing dropped off basically 50% of its value from that retest. And again, to Baba's point, you could have tried to pick a top for 100 points in Amazon. Every high was not the high until the high that was the high got confirmed by this activation leg. And when we retested that trend break leg, that activation leg, that retest still provided a move from 170 all the way down to basically 80. And so you got 110 points. Now, do you have to hold for that whole thing? Obviously not, but, that idea. All right, so one more bonus one on the way out the door, since everybody loves crypto. Where did my BTC go?
Oh, you're not doing Mung?
No, well, I do have a good one for Mung. but let's see. we'll see how good I am at drawing it. Okay, so I had it pre-drawn, but let's draw it. So very clearly, the move from 65,000 or whatever the previous high was, 69,000, and then we make a daily low down here at 15,000. So we'll zoom in on that. Okay, so here we are at the daily low. The daily low starts. The move to the low starts on Saturday the 19th. Of November, and we make a move to the low, and the high that came before that is going to be this high here, and we need to activate that, and the activation leg is going to be this leg here, and we'll make that yellow. And this is the leg that, in my opinion, the BTC buyers said, yep, we like that low, let's go higher. And so what we'll do is say, what is the bottom candle of that activation leg? That's right here. And then upon retest, so that activation leg started on the 28th of November. We did not retest that until the 19th of December. And they made an initial move away from it, from 16,000 to about 17,000. Or 16,400 to about 17,000. They retested it again, but they held a higher low. And it went from that activation leg at roughly 16,400 to 104,000, and you can see kind of the power of trend breaks as you zoom out. That is a daily trend break on on BTC. So you can see the power of these moves, and if you go and do some research on sort of these concepts, this is kind of my adaptation of gained lost, move to the high, move to the low. Whoever created it, Cool Tech or whatever, Cool Trades or whatever. There's a handful of guys that kind of teach this process. This is my systematic approach to it, and what I found is the move to the high and the move to the low is a very important level, but almost more important is who confirmed it, right? Who said we really, really like that low? And again, to Baba's point, I don't want to be the innovator. I don't want to pick a top. I don't want to pick a bottom. I want to find out where can I rebid the top, re-offer the top and rebid the bottom, right? And so this system or this setup allows you a systematic approach to sort of find that entry when you quote unquote missed it, right? Like, oh, I missed that low and we went 400 points. Well, okay, cool. Are you ready for the rebid? Because we're coming back to some version of that. There's like almost no examples of a chart where you're going to pull it up and we make a low and we just rip 150% to some new all-time high. Yeah, sure, okay, maybe in like some mid cap or low cap stock or something like that happens. But in a natural market like an index or a big name, a FANG stock or something like that, you're almost always going to find this pattern of a low gets made, a sequence of higher highs get put in, higher highs and lower lows, and one of those legs, one of those sequences is more important than the others. And that's what this setup is about, is identifying where do I want to sit up in my chair and get interested in looking for longs or looking for shorts. And, again, this is just kind of a way to draw some horizontal lines on your chart to pay attention. And they tend to work pretty well.